Okay, so that's the latest news, but let's see what's actually going on with the corporate show and tell, and the earnings are coming out of it with Mike Kendall from JB Weir in Melbourne. How are you, Mike?
Good evening, Peter. I'm well.
Are you enjoying this company earnings season, mate?
Yeah, so far it's been pretty good. The investors look like they've been a little bit hard to please, but overall I think the numbers have been okay, and some good dividends, particularly for super fund investors.
Yeah, there is this inclination to look after shareholders with some higher dividends. It's a nice thing to see, isn't it?
Well, it's a good trend. I think the pressure has been on corporate Australia for the last 12 to 18 months pretty intensely as interest rates have come down to turn around and say, well, come on guys, it's the shareholders' business and we should be rewarding them. I think that's one of the reasons we've seen a little bit of a run in the BHP and the Rio share price probably for the last a couple of months. I think there's been building momentum, and again the talk continues, particularly around those two stocks, that investors are pretty hopeful we'll see some buybacks or some form of shareholder benefits at their full year result come 30 June.
The actual trend of paying dividends, and I guess this is a question I want to throw in there. Are you seeing anything on the revenue side that makes us feel a bit optimistic about the economy, or is a lot of this coming from, costing out?
Well, I mean, I'd love to say we're seeing the real revenue push come through, but at this stage, Peter, I still think it's efficiencies, companies running very lean operations, and it's still very much a cost-out story. Comments from Ian Narev from CBA, medium term things are looking okay, but short term, still a few question marks. A lot of people are waiting to see what's in the fiscal budget come May, Peter, and I think people are still running out or playing their cards fairly close until they have a look at that, have a look at the international economy, seeing if it's settled down before they get too adventurous. And we see improving sentiment. Yep.
Okay, let's talk about some of the success stories today. Seek up 17% in share price. I know record profit was up 17%. The share price went up as well. What's the story?
Well, a pretty thrilling result for shareholders there, Peter. It was quite a remarkable story there. The company really smashing market expectations in terms of the numbers that they've delivered. 111 million profit, up 65-67%. The company forecasting, they're expecting that for the second half as well. So I think there are a lot of investors, particularly at the professional end of the market, doing two things. The stock had been pretty heavily shorted, so I think there are a lot of short covering today, which again I think exacerbated the upward move. But also a lot of people saying, well, maybe we're underrating the earnings potential from this business. But putting those two market factors aside, I think when you look down and scrape through the numbers, I think the Job Street acquisition, which covers, it's Malaysian based, but it covers Vietnam, Philippines, I think Indonesia and Singapore as well as Malaysia. So a pretty exciting business there. The company's saying that Seek, their Australian business, which has about 80% of the Australian market, Peter, despite a pretty tepid economic environment, is saying that it's doing extremely well. Seek Education doing well. They've got the largest or one of the two largest online groups in China, which I think they're looking to float, which will realise value for shareholders. Then they've got the South American business. So it's a business I think that we're going to see business schools run case studies off in the years ahead, where they're going to look down and say, how do you roll out a strategy in this, what I call new economy space? And it's not only just an Australian success story, but they're very successfully translating and taking their business model and applying it successfully right around the world. So they're becoming a global player. It's a very interesting story to watch.
Michael, do you think it's too late to jump on this bandwagon, or do you think there's plenty of future for this share price?
Well, look, it's certainly not cheap. So if you were, I'd be taking a 3 to 5 year view, but a lot of institutions will be running the slide rule over this stock in the next couple of months, and I think some of them will be taking positions. Suggest there's some upside, but you certainly pay for it at the moment, Peter. So you're going to have a long-term view.
You might not make 17%, but I guess some people would be happy with 8%.
Look, it might take a rest over the next couple of days after a big jump, but yeah, over the next 2 or 3 years, this stock could, we've seen what Xero can do when global investors have a look at a company with great success. So I'm not suggesting it's going to do the same thing, but certainly looking good.
Yep. Now, what about Wesfarmers? It did well today as well.
Well, look, the actual share price down on the day, I think investors still seeing problems in the Target business, but Coles did very well, Bunnings did very well, Target and Kmart softer and still a bit of a drag for the company. Interestingly, the Woolworths share price jumped a little bit today, and I wonder whether some investors speculating that because Target and Kmart are still soft, whether Big W's pulling business across from them. But interesting to look at Woolies and Wesfarmers outside their results. At present, Peter, they're not really moving around too much in the market, which suggests investors are very busy shopping for earnings and dividend growth. And the supermarket sales are steady, good quality, very reliable. But in markets where you're looking to drive dividend and earnings growth, maybe the supermarket stocks aren't where you're going to find it. Are not where you're going to find, you know, strong share price growth over the next 12 months. So. Good results, but flat performance.
Yeah. Do you think that Metcash is, in a sense, is in a squeeze play, that the harder Woolworths and Coles and Wesfarmers push to get as much out of the consumer wallet as possible, it's going to make it harder for Metcash with its Mitre 10 business and with Masters coming along?
Well, Metcash have got a new CEO, so I think a fresh pair of eyes on the business is always a good thing. The company's been pretty busy putting their head down to try and turn the business around. I know the IGA supermarkets are seeing improved performance. Very strong dividends. So if you're a patient investor, Peter, 7% plus franking credits is good rent to get on your capital, as long as you believe that the strategy can be successfully rolled out, and that's yet to be demonstrated, which is why the share price has been pretty flat performer as well.
Yeah. Okay, let's go to the Suncorp story.
Look, Suncorp's a stock I've liked. Bit of a mixed bag in the result today. The general insurance numbers, a few were surprised because of some bad weather events and storm-related claims and bushfire claims out of New South Wales and Queensland. The insurance numbers a touch below what some had been hoping for. I was actually a little bit disappointed in the banking result, which is up from 4 million profit last year to 105 for the half this year. So certainly they're turning that business round, but we were looking for a little bit more there, and a couple of provisioning items in the banking area saw it miss what we were expecting, but the dividend up from 25 to 35 cents with franking. So if you're a super fund, it looks pretty good. I think Suncorp will do all right, but you're always going to have the swing factor in the insurance businesses there, Peter, with claims from major weather events. So something to be aware of, but it's a quality business and it's doing okay. Yeah,
it was fantastic investment when the share price was terribly beaten up. But I agree with you that swing factor of insurance makes Suncorp a much harder play, despite the fact I think they've got their banking story pretty well right. We're going to have the CFO of Suncorp on the show tomorrow night. But the insurance thing always worries me, because you can be a great insurer, but just Mother Nature can give you an absolute kicking.
Yeah, that's correct. And look, premium growth has been pretty strong, but I think it's an interesting point for all the viewers at home to keep in mind that the devil can often be in the detail, and you don't have to drill down too far, but understanding the nature of what's behind the companies that you're buying. And if you are buying into insurance, premium growth can be very strong as insurers look to offset claims. But if you have these big events, as you've identified, it can really hit returns from half to half. So you need to be wary.
Okay, let's talk about Woodside.
Woodside, look, second highest result on record, and the share price actually went down on the day. The dividend, I think, US $1.03 a share. The profit, just let me check the numbers again there, Peter, 1.75 billion, the second highest on record. Not the highest simply because they had some earnings from the sale of a stake in their Browse operation previously, which saw them create a bumper profit. But the company's saying, interestingly, dividends should be steady for the next couple of periods, which is good news. They recently jacked up their dividend. So for super fund investors particularly, Woodside dividends looking attractive. They're saying the outlook should be fairly steady, record production. So again, we're seeing more efficiency driving in the operations of, again, another major Australian resources company, and it's delivering pretty solid results.
Yeah, what do you think is holding Woodside back? It kind of has a cap around $39-40, doesn't it? What do you think is holding it back? Are we waiting for proof that their gas business is going to, help them break out of that sort of price cap?
Well, look, I think it's two factors, Peter. I think absolutely people are looking for what is going to be the driver of the reserves or the productive life for Woodside into the future. And the success of the gas business is a big part of that. The company's working hard on some new projects, but I think the market needs more convincing. I think they've got about 16 years of reserves and resources left compared to a lot of the other major mining companies that investors can choose from, which have mine life reserves which are much longer, 30 years plus. The other big factor hanging over Woodside, of course, is what's going to happen with this Shell stake. I note it looks like the petrol operations have now been offloaded. The question is whether we're going to see their stake in Woodside offloaded, and I think that's seeing a few investors are fairly cautious on pushing the share price too far up, given you might see a large stake come to the market and be sold at a discount.
Yeah, I think that's worrying a lot of people. Really good point. All right, mate, thanks for joining us on the show.
Thanks, Peter.
After the break, we'll see if there are any tasty takeover targets sitting on the Aussie stock market right now with a man who has a nose for sniffing them out. Tom Elliott joins me up next.